The Wednesday show is here. It's the Hash, and we're going to talk about crypto news and so much more.
The hardest day
I'm
of the
Zack. It's the best day, right there, smack dab in the old middle of the week. It is Wednesday. Let's get to it, guys. Naomi, first story of the day. Lead us off.
Okay, so first story today is a pretty intense story, going over to Hong Kong and seeing what's happening there with freedom of the press, or shall I say lack thereof. So the Apple Daily newspaper, which is a defiant pro-democracy newspaper in Hong Kong that's been very critical of the Beijing government, has decided to print its last edition. It marks the end of free press in Hong Kong, essentially. And the publication's demise comes after the government froze its funds, seized computers, arrested executives, and this was all to stop their critical view of Beijing being printed. So it's a pretty intense situation over there. And most of you know, last year Beijing imposed the national security law in Hong Kong, which basically undercut the two countries, two systems rule that they actually had in place and was meant to be in place for a long time. And then the security law came in and undercut all of that. And since then, it's really been absorbed into China. Now, from the cryptocurrency scene, we're talking about frozen funds there. We're talking about their inability to actually continue. I wonder if crypto could have played a role, although it seems that the crackdown would have continued to, target individuals regardless of what funding they have. But Hong Kong has also kind of been this bastion for exchanges that didn't want to be considered Chinese and sort of went offshore and then went to Hong Kong. So, the government's clamping down more and more, and I wonder how much longer that sort of thing will continue. But I'll throw this to the group. Ben, I'm going to start with you. What are your thoughts on everything that's going on there?
Yeah, it's really just disappointing to see. I was reading this story, and it's a continued crackdown that we're seeing in China, sort of, tossing away the idea of civil liberties and really quashing any sort of dissent that we see. And I think it's something we're going to continue to see happen. We also we're seeing this alongside crackdowns on mining and the like. So it really does seem like the government's trying to consolidate all the control it can. And, this is why also we talk about the ideas of CBDCs and stuff as concerning, because when you see it alongside all of these other signals, it's an indication that there's not going to be an appetite for agency or independence amongst these sort of things. And then we kind of look at it through that lens generally. But in this one in particular, I was kind of racking my brain, right? I was like, what could have stopped this? Naomi, to your point, I don't think crypto really could have played a role. I was thinking about decentralized, networks, and if that could have helped, shut this down. Obviously, if you're not living in China or in Hong Kong, there's likelihood that you're not going to get arrested for these things. So you continue to critically support or report there, but you're disconnected from the place that you're actually reporting on. And so, we talked about CNN's NFT vaults on prior shows, and I was wondering what role NFTs might have been able to play here, but I'm also not sure if they're taking down, the web pages, or they're deleting previous stories and the like. That's a little unclear to me. So not a lot of answers here, a lot of disappointment, but Will, I'll toss this one to you.
Yeah, I just from this story, pretty tough topic for today's show. I think overall, just a reminder that totalitarian regimes didn't die out in the 20th century. China is still putting people in concentration camps. They're still threatening, intimidating Taiwan. And it's not surprising that they're going to Hong Kong and shutting down newspapers that are not in their favor. So I think in the Bitcoin space, this kind of reminds us why we care about the technology and why we care about the promise of cryptography itself, as opposed to just number go up every day, which is also pretty fun. But the main point of why most people are into Bitcoin is because they're freedom loving. And hopefully one day we see a world where you can mine Bitcoin in China, and you can trade Bitcoin in China, and you can interact and move all around China. And once it's a free country again.
Jenna, so
yesterday we spoke about, CBDCs pushing mainstream audiences to learn more about Bitcoin and what that means when it comes to freedom in the financial system. And I wonder if this is what it's going to take to push that mainstream audience to learning more about decentralized communication, decentralized socials and media. Naomi, did you have something to add there?
Yeah, I visited Hong Kong at the start of last year to interview protesters because it was right in the midst of all of the chaos there, with, you know, stores being burnt down and all that sort of stuff. And it was interesting because I wanted to see what crypto was like. And it wasn't really that pervasive. I chatted to the people at the Hong Kong Bitcoin Association. They were awesome. They were, you know, doing what they could to educate people, but it's largely a cash culture there. You kind of have the octopus card, which is like the all-encompassing, you know, use it for your train, use it to buy your groceries, use it to track your every movement and everything that you do kind of card. Or people were like, I'm cash only. And there were lots of stores that were cash only. So it was like, it's a big jump from a cash only economy to a crypto economy. But it shouldn't be that big a jump from like an octopus card economy. But I do understand that there's not really, you know, a lot of incentive for people to explore the technology unless they're being specifically targeted. But Ben, I'll throw it to you for some final thoughts.
Yeah, and I just
there.
want to bookend this conversation before I transition us to our next story by noting that, you know, I've gotten pushback from listeners and viewers of this show around us focusing too much on China, too much on Russia, for example, and not focusing on the US. So I just want to note too that there was reporting from the New York Times last night that showed that the Saudi individuals who killed Jamal Khashoggi, a op-ed columnist at the Washington Post, at the behest of MBS, the dictator of Saudi Arabia, were in fact trained on U.S. soil under a State Department contract. So we're not turning a blind eye to the U.S. also being involved in this and quashing dissent in other places. And I thought that was just a good way to sort of note on the back end of this. This happens in China. There's also a ton of stuff happening in the U.S. that has tentacles out into the rest of the world. But moving on from that topic, I'm going to take us to the land of tech giants and a recent report from the Wall Street Journal that showed that they're accelerating the race to buy up renewable energy, and specifically to show that they're not just kind of sucking renewable energy out of the grid, but actually adding it, and not just sort of moving emissions around, but adding to the overall pool of renewable energy. So I thought this was interesting in the sense of the conversation around Bitcoin and the environment, and particularly because I think it goes back to where we assign value, right? Like, is Amazon a valuable company in terms of the services it provides when you contrast that with what it pays workers, you know, people having to urinate in water bottles because they're worried about being fired for missing shifts, and a host of other concerns, not to mention tax issues. But I'll toss this to you, Naomi, for some of the energy questions, but I wanted to hold these things up kind of side by side because I think they are part of the same overall conversation.
Well, I mean, I think there's just such a push right now. All of the conversation in the media is around like Bitcoin, renewable energies, all of that. You know, there's big scourge on the environment that they think Bitcoin is. Whether or not that is accurate, there's a lot of pushback against that. There's a lot of renewable energy used in the crypto space, but it doesn't surprise me that all of these big tech companies are jumping on this bandwagon and using this as part of their PR machine to say, look at all the stuff that we're doing. You know, how much they're concerned about this, I'm not sure, but they're definitely concerned about the image and definitely concerned about the public perception and all of this. And so it's interesting that they're all kind of jumping on this bandwagon. But I'll throw this to Zack.
Waste coal. Waste coal is the answer. We need to get Jeff Bezos on the waste coal train. I'm still fascinated by waste coal from yesterday's show. I still think there's a lot of questions to be asked about that. So I'm gonna have to dig into that a little bit more and see if it's really an energy alternative that's not so dirty. I think the ESG conversation is certainly ramping up, and this is just another part of that conversation. I think it is actually serves the narrative interests of the Bitcoin people to see these conversations being applied more broadly to other sectors of the economy, right? If we're going to talk about what is worthwhile energy to be consuming, it certainly should apply in conversation to Bitcoin as it should apply in conversation to other technologies and the companies that promulgate them. So the fact that this conversation is playing out perhaps a bit more even-handedly across sectors could be interesting. But to me, again, another data point that ESG is real and is not going anywhere. And it's something that whether it's, you know, whether it's Bitcoin, whether it's Ethereum, whether it's Amazon, whether it's Apple, whether it's Google, everyone is being faced with these questions and seemingly is taking them quite seriously in deciding how to act. I'll throw this up to Will. I saw his hand up, and then Ben, I think you had something as well.
Yeah, I'll just say something to make Naomi smile today. I think in the ESG question, it's interesting. Like, a lot of people say it's like PR and pivoting and marketing and whatnot. But I think like this is how normal market cycles work. And it's better to have this and then the government reaching in, like forcing everyone to change whatever energy sources they use. Like the fact that these corporations or even smaller companies are like purposely choosing what energy to use just based on what their consumers' preferences. And I think is like a net positive for every company, as opposed to just having like regulators come in and say like, you need to start making these changes necessarily like right now. But Jen, I saw your hand go up, so I'll throw it to you.
Yeah.
Well, I was just going to take a page out of your book, Will, and say maybe these companies just like money. I think there's a lot of investor pressure right now
It's Ben's book. That's not mine.
To focus on ESG, and there's a lot of consumer pressure now too. That I think is being amplified by the Bitcoin news. So I think these companies don't really have a choice. If they want investor funds, they need to show that they're focusing on environmental issues. And if they want people to buy their products, they need to do the same. But Ben, I know we don't have a lot of time left, so kicking it over to you.
No. And I want to say, like, this is overall a net good, I think, for everybody. Like, let's be quite clear. The reason we're concerned about the environment is because climate change is real and accelerating, and we need to do everything we can to tamp down on global emissions to prevent catastrophic results. Like, that's the reason we care about this overall. And, I don't want to paint this as it's bad that 10 companies are doing this. I think it's good. I just think it's a allocation of resources and framing, and looking how we're comparing all these things is really important when we're considering the world we want to live in and on. But I also think that, Will, to your point, it's an interesting market dynamic playing out in the sense that, in this piece, they talked about the fact that in some companies, like private companies are bigger subsidizers of renewable energy than governments themselves. And I think, that's an interesting pivot from what we've seen. I think that reflects positively maybe for the Bitcoin market as well, and the mining market, in terms of going where energy is not only cheap, but also as market mechanisms push people towards renewables as part of maybe this larger ESG concern. So overall, this is definitely a net negative. And I'm really curious to see, because part of the debate around the environment is that, and at least with Bitcoin, is that, there is no more renewable energy on the grid. We're all just kind of sucking, what's existing there is like, these deals that these tech companies are signing are with the goal of like adding more renewables to the grid. And I'm curious to see, if Bitcoin maybe like and miners venture down that route as well and buy, energy at a sustained rate for a long period of time, such that it's not just, taking a slice of the pie, but potentially adding to it in a positive way. But any last takes from anybody else? All right, I'm taking that slice of pie and going home, and we are going to break.
Yum, nice pie toss there. Bam. We're going to take a break. When we get back, we're going to talk about the Binance NFT Marketplace, launching with some high art to get things rolling with the Binance Smart Chain-based collectibles platform. So stick with us. That's going to be on the hash after we take a break, and we'll see you on the other side. See ya.
CoinDesk indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index XBX has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
This just in from the CoinDesk Sports Desk. We are going to look at the latest sports sponsorship from FTX, the crypto exchange helmed by the wonderfully coiffed Sam Bankman-Fried. This time, it's with the MLB. We've seen it with the NBA by way of the Miami Heat arena down there in Florida. We saw it in a big way with an esports team also earlier this month. Now, FTX is doing it in MLB. It will start with little advertising patches with the FTX US logo on all umpire uniforms starting at the All-Star game July 13th. Since it's Sports Desk, I'm obligated contractually to throw this to Naomi. Naomi, what's your take on just this escalation of FTX sports sponsorship stuff?
Why do you do this to me, Zach? Why do you do this?
It's in the contract. It's in the deal. You got to read the fine print. Come on.
I am queen of Sports Desk and all the sporting points and sports teams and games out there, of which I am kind of an expert. So, I mean, I'll ask a question to the group then. When FTX says that they crunched the numbers and found sports naming rights as yielding the best return on investment for their marketing spend, like, how do they gauge that? And how does that, like,
that was my question too.
Factor in? Like, how do they know that seeing the patch on the umpire's arm is what led them to then signing up at the exchange? And how much of a click-through rate, I know it's not called click-through, it's the closest analogy I could do with like the sports real world guys, give me a break. But like how much, like how successful are those naming rights? Like you have, Coors Field, you have all of these names of big stadiums. I've always wondered how effective just having the name there is, but Zack, your hand was up, so please give us insight.
All right, so that was according to sources, first of all. So just to clarify, I have yet to confirm this with FTX, but a source with knowledge told me, CoinDesk, that they are hardcore quants. They ran the numbers, and it was the most bang for your buck in terms of getting your name out into the world, right? So every time the Miami Heat have a game, they have to say, hey, they're playing in the FTX arena. And that gets a lot of cover in any number of ways, all the way up and down the media landscape, right? I remember driving to Miami and I was listening to some Latin pop, and sure enough, in the commercials in Spanish, FTX Arena made an appearance. And I thought that was a really interesting revelation as to the reach that these types of branding deals extend. So I was shocked to hear that from a source that they had crunched the numbers and they found this to be the sort of a hidden gem in terms of getting their name out into the world. So they spent $135 million for the privilege to do that with the Miami Heat. Wow. They spent $210 million for the privilege to do that with an esports team that you've never heard of, but has 2 million followers on Twitter, and I'm sure many more on other platforms. The dollar value of this deal was not disclosed, but it was disclosed that it was a 5-year deal. So I would also imagine that this could potentially be quite large. So I don't know if that was the answer, but that was what sources told CoinDesk. So, Will.
Yeah, I'll grab really quick. So Chamath, I don't know how to say his last name, but the multi-billionaire dude he did Facebook and Bitcoin and all that stuff. So he made a lot of money. He invested in the Warriors, the Golden State Warriors. And his rationale for doing that back in like 2010 was that sports is kind of uncorrelated with the rest of the market. Like people still go to sports games when there's a dip, and when things are going really well in the economy, sports only gets hotter. It's just like part of, I guess, American culture. Like sports doesn't necessarily die, it just keeps going along. There's always someone watching it. There's always money to make. So it makes sense for FTX to be putting marketing money into something that even during like a crypto bear market would yield some return in regards to people coming onto their platform.
I think this makes all the sense in the world. I also think it points to our susceptibility to advertising as humans, no matter how subtle it may be, right? Like if you're seeing FTX and, people tune into like Miami Heat games, people tune into MLB games, like not only people that are there, but, millions of people that are watching, and they're just like, what's this company? Like, they might go check it out, they might not, but you're just putting yourself in front of so many eyeballs that you're going to get some hit rates. And I kind of want to compare this to maybe like more crypto native sites that are awash with advertising, where you're kind of getting bombarded with like, here's this crypto thing, here's this crypto thing, here's this other crypto thing. And I do think that makes the selection a little bit harder than necessarily this being maybe your first entry point or the first kind of presented on a silver platter to you in association with something that you are nostalgic for or really enjoy. And I will personally vouch to this because I only get Taco Bell during the NBA playoffs because those freaking commercials are on every single game. No, not sponsored, just real. I do not support their NFTs. But this is definitely like, I know this hurts deeply, but it's true. Jen, what you got?
Just to your point, we talk a lot about trust in crypto, especially when it comes to a mainstream audience. And you think about mainstream people, trying to figure out what platform should I get onto, where should I put my money? And if you're watching sports and you're hearing FTX over and over and over again, I think that just clicks in your brain as something that, oh yeah, I've heard this before. This is a trustworthy platform. I'm gonna try this one first. So I think it is pretty clever.
And more to come here. There was a mention of products and experiences that FTX and MLB would be collaborating on in the future. So whether that is some sort of digital collectibles, we shall see.
Experiences.
Jen, let's move on. You take it here. What are we talking about next?
All right, so we're moving on over to NFTs. Binance's NFT Marketplace is launching on Thursday with work from Andy Warhol and Salvador Dolly. So the marketplace is going to run, the marketplace runs mainly on the Binance Smart Chain, but connects to the Ethereum network as well, which means that if you have NFTs on the Ethereum network, you can view them in your Binance wallet. So we've spoken about this on the show previously, Naomi. I think it was your story when they announced this in April. They are finally launching. And for me, it feels like NFTs have kind of fizzled out. What do you think about this launch? Is it going to be a success?
Oh gosh. I mean, it makes sense that Binance is getting into it. It would be remiss of them if they didn't have an NFT platform, given that they're, going into synthetic stocks and all kinds of interesting other products. So it makes sense that they have this. I don't think NFTs are going away. I think they're evolving. I think obviously there was a big boom at the start and everyone's like, I need to get into this because I missed out on the Bitcoin craze and I want to make a bunch of money. And I think that hype has definitely died down, but it's still, there's still a lot of NFT action out there. I have some friends who are artists who are still citing that, they're doing really well, and able to sell things still. I went to see Blau in Miami, DJ, and they airdropped NFTs to all the participants. I have some friends who were able to sell them really easily on marketplaces. I think that this space is evolving, but you're right. The initial hype has obviously died down. But Will, I'll throw this to you. What are your thoughts on this launch and the future of the NFT world?
Yeah, I want to kind of come back to our last segment. So FTX and Binance are kind of the two exchanges that are mostly outside the US that we see competing against each other. And both have tried to make inroads specifically into the US by launching partner exchanges. So you have FTX US and Binance US. And then Coinbase is kind of like the 800-pound gorilla in the room. But it's interesting to see how Binance is kind of focused specifically on crypto. So you have their launch platform for tokens. You have this NFT platform now. Then you have even they're into mining and they're into a whole lot of different crypto specific stuff. FTX is kind of going a different way. They're just focusing on adding a lot of new tokens quickly, allowing people to trade easily, and then moving into sports marketing. So both ways are kind of just methods, I feel for getting more people onto their key platforms, which would be just trading. That's where they're going to make most of their money. But it's interesting to see that Binance has chosen a very crypto native way of doing this with NFTs, and you don't see FTX doing that as much.
I would keep an eye out for some news out of FTX soon on that front, Will. That might be kind of interesting. But I think if anyone can make this work at scale, it might be Binance Smart Chain, right? Binance Smart Chain, easy breezy, beautiful. People use it. It's sort of gamified. It's weird. It's I don't know. They make it sticky. And if they are able to do that in a way with NFTs that works with their audience, I think that could be quite interesting to see what sort of the long tail of NFTs would look like in that network. So, yeah, I don't know. It's funny that they kind of went with these old school icons of the traditional art world. It's kind of a nice, I guess, throwback to an earlier day. But yeah, I'm gonna be watching this one closely, see if they can sort of pump some life back into the NFT collectible space. But yeah, Jen, what were you gonna say?
Earlier this year, Binance ran some social media competitions where they were getting artists involved. So I think you could share your art on social media, and there were cash prizes involved, and they would give you kind of a limited edition. They would mint your art as a limited edition NFT, which I thought was really cool because they've been educating artists, maybe not crypto native artists, but just normal artists on how to get involved in the space. And so I think that user experience and that accessibility is really there. So I'm excited to see what happens next with the platform. But Ben, I'm going to kick it down to you. You are often very cynical about NFTs.
Get him, Ben.
There's a reason I've been quiet this segment. I don't know. Yeah, I'm curious about what these estates of these artists think about this. I am really interested in the ways that NFTs evolve. I am less interested in these forms of NFTs personally, but again, this is just, and I think this is also in harkening back to the previous story with the advertising, it's meet your audience where they're at. Binance has got this kind of home crowd that they can pitch these things to and really easily access. And then you can even show your Ethereum-based NFTs in your Binance wallet. So I think this is sort of dip your toes in all the pools and see what sticks, I guess, to Zach's point. And if this isn't popular, I would imagine that it might not last long. But again, offer the marketplaces that people want. Like we see this with traditional like finance starting to like offer up, various crypto optionalities within their own sorts of things. So I think that's what Binance is doing here. And, that's it.
Well,
right.
we're going to move over to DeFi Land for a little bit of a different conversation. So WireX has integrated some DeFi components like Uniswap and Aave to make using DeFi more mainstream. The idea is that you can kind of plug in from your typical WireX account, which has more or less like more, I'd say like mainstream adoption than like your typical Uniswap user has, and then you can kind of get like returns on your funds, whether that's like crypto holdings or fiat holdings themselves, directly through the platform. So like the way I kind of conceptually see this is like an intermediary step from moving from like the degenerate method of like interacting with DeFi, and then you have like the WireX, and then you have like the JP Morgans of the world. So kind of like going down that tiered system. I want to boot this to Zack. What is your initial thought when you see like these bigger, more institutional-esque players moving into the DeFi scene? To me, it just kind of signals like we're definitely headed towards a bear market, but you might have a different take.
Whoa, that's a hot take. What
That
does that
was
mean?
quite a
I can
pivot.
walk that
Well,
out.
you just hit blindsided me, bud. All right, you go first, and then I'll go after you. All right, why is this a bear market indicator, Will Foxley?
I think it's a bear market indicator because all the good juice is out of DeFi right now. So like how DeFi works is a lot of times like you're just spinning up your own token and then people are yield farming for it by putting in different assets. And then you get that token in return. But since we've kind of seen like 2 or 3 of these mini like bearable mini cycles within DeFi itself, I think that we've just kind of seen it like drawn out and played out. And like all the DeFi degens have just, a lot of them have been wiped out, frankly, or they're just like holding in stable coins. And now we have like this slow movement where you have institutions or just actual firms moving in and becoming interested in the technology. I think it's very similar to Bitcoin. Like 2017, price went up, then you had like the bigger firms move in, bear cycle, and then things get interesting again. So that's why I think it's a bear market.
Okay, I mean that's an interesting take. I think the idea is to like lower your expectations, right? So like DeFi G-gens are only happy when they're farming and they get like 2x, 3x, 4x, 5x returns, right? Like stupid APYs that look like 300%. Oh, a 300% APY. Like, oh, that's tame. Lower the bar to like what your parents get in their savings account, and then put on these friendly like skins on top of the DeFi bones and the back end, and you get like say
weird
5%
Yeah, it's
APY
really weird.
through sorry, I was like
It's a very
like
uncomfortable metaphor.
Fortnite skins, man.
Oh,
Skins.
God. I had the Shining going on in my head.
You guys suck. I hate you all. Anyway, mainstream gateways to DeFi protocols. That's all I'm trying to say.
I think my argument
and maybe
won.
it'll stick.
Yeah, and Will, just to add
You
a
and your bear
final note
market
there.
indicator.
Like when you say that people are mining for these specific DeFi coins, I mean, you have things like Thorchain now where you're just earning native yield in whatever asset you choose to stake. So, I mean, Zack brings up a huge point that we are not getting any interest on our savings account. There is no way for us to make passive income. So DeFi does seem like the next step for people who are like, I don't want all of my money to disappear. So I'm less bearish than you. I'm pretty optimistic that DeFi is just going to play a big role in our future.
Open network, convenient front end, user adoption. That's my equation for the day. But all right, we'll leave it. I will stop doing metaphors. Sorry, guys. I'm just shaking my head. Anyway, that was the hash for Wednesday. We told you the Wednesday show was going to be tight, and I think it delivered. So anyway, thanks for sticking with us. We'll be back again for the Thursday show. Maybe we'll see how that goes.
Thursday's a great
until
day.
then. Thursday, you big Thursday, Friday light.
Yeah.
So
Thursday.
we'll be back for that one tomorrow. Until then, we got All About Bitcoin on CoinDesk TV at 3 p.m. Eastern, and we have all sorts of great news on CoinDesk.com for you to peruse at your leisure. I'm Zach. We got Jen. We got Ben. We got Will. We got Naomi. We're the Hash, and we'll see you soon. Thanks so much for tuning in.
Bye.
All right.
Bye.
Bye.